Have you ever put your money into a seemingly safe investment only to have it vanish into thin air? Imagine a situation where you're promised attractive returns on your digital assets, only to wake up one day and find your funds frozen, your trust shattered, and your financial future uncertain. This isn't a hypothetical nightmare. For hundreds of thousands of people, it was the very real, very painful reality of what happened to Gemini Earn. For a while, Gemini Earn was a golden goose in the burgeoning crypto space. It promised users the ability to earn attractive yields on their cryptocurrency holdings, far exceeding traditional savings accounts. The premise was simple: you would lend your crypto to institutional borrowers through Gemini, and in return, you'd receive interest. This seemed like a win-win, a way to make your digital assets work for you, backed by the reputation of a seemingly reliable and regulated crypto exchange like Gemini, founded by the well-known Winklevoss twins. Gemini, a company that launched in 2015 and quickly became one of the largest crypto firms in the U.S., introduced Gemini Earn in 2021. Their marketing emphasized security and trustworthiness, assuring users that their lending partners were vetted and accredited. This assurance was a critical factor for many investors who were looking for a more stable way to participate in the volatile crypto market. The promise was that you could redeem your assets at any time, and that partners would honor requests to return funds within 5 business days. These were the promises that built confidence, promises that would soon be put to the ultimate test. But beneath this veneer of stability, there was a critical single point of failure: Genesis Global Capital. Despite Gemini's claims of multiple vetted partners, Genesis was, in fact, the only lending partner for Gemini Earn. This crucial detail, largely undisclosed to the average user, would become the linchpin of the entire disaster. The crypto market, as we all know, is prone to extreme volatility and unexpected shocks. The year 2022 was particularly brutal. A series of high-profile collapses sent shockwaves throughout the industry. First, the Terra Luna ecosystem imploded, wiping out billions in value. Then, in quick succession, major crypto hedge fund Three Arrows Capital, 3AC, filed for bankruptcy. These events weren't isolated, they had a domino effect, and Genesis, being a major player in crypto lending, was deeply entangled. Reports in July 2022 began to surface, indicating that Genesis had suffered hundreds of millions in losses due to its exposure to Three Arrows Capital. This was a massive red flag, a critical vulnerability in the foundation of Gemini Earn, yet Gemini customers were largely kept in the dark. The company didn't inform its users that its sole lending partner was in severe financial distress. This lack of transparency would later become a major point of contention in numerous lawsuits. The situation escalated dramatically in November 2022 with the catastrophic collapse of FTX, one of the largest crypto exchanges in the world. FTX's bankruptcy sent tremors through the entire crypto ecosystem, and Genesis was once again directly impacted. Genesis revealed it had over $175 million in assets frozen on FTX. On November 16, 2022, in a move that sent shivers down the spines of Gemini Earn users, Genesis halted loan redemptions and new loans. On the very same day, Gemini suspended customer withdrawals from Gemini Earn. The promises of redemption at any time and 5-day processing times evaporated overnight. For Gemini Earn users, this was a moment of profound shock and betrayal. Their funds, which they had entrusted to a supposedly secure platform, were now inaccessible. The initial explanations from Gemini blamed the FTX collapse and market turmoil, but as details emerged, it became clear that the problem ran deeper. The core issue was a liquidity mismatch within Genesis. Simply put, Genesis had borrowed heavily against customer assets, and its liabilities far outweighed its assets, rendering it insolvent. The fallout was immediate and severe. Approximately 232,000 Gemini Earn users found themselves locked out of their digital assets, which at the time were valued at around $940 million. The trust that Gemini had painstakingly built began to crumble. Lawsuits swiftly followed, alleging that Gemini had offered unregistered securities to investors and, crucially, had hidden significant risks from them. The core of these allegations was that Gemini misled investors about Genesis's financial health and the inherent risks of the Earn program, failing to disclose its single point of failure and the precariousness of Genesis's financial position. The legal battles that ensued were complex and protracted, involving multiple parties: Gemini, Genesis, Genesis's parent company Digital Currency Group, DCG, and various regulatory bodies, including the New York Department of Financial Services, NYDFS, and the Securities and Exchange Commission, SEC. The New York Attorney General, NYAG, filed a major lawsuit against Gemini, Genesis, and DCG, alleging that they defrauded investors and concealed over $1.1 billion in losses. The legal proceedings focused on several key points. Firstly, the unregistered securities argument. The SEC alleged that Gemini Earn constituted an unregistered securities offering, meaning it was operating outside the regulatory framework designed to protect investors. This brought into question the entire legality of the program from its inception. Secondly, the allegations of misrepresentation and fraud. Lawsuits claimed that Gemini made misleading statements, promising users they could always redeem their assets and implying a diversified lending strategy when, in reality, it was all concentrated with Genesis. The failure to disclose Genesis's financial troubles, particularly its exposure to 3AC and FTX, was seen as a blatant omission of critical information. The bankruptcy of Genesis in January 2023 further complicated matters, throwing the process of recovery into the already intricate world of bankruptcy courts. This meant that the fate of Gemini Earn users' funds was now subject to the lengthy and often uncertain procedures of bankruptcy reorganization. For over a year, Gemini Earn users endured an agonizing waiting game. Updates were slow, and the process was fraught with legal complexities and negotiations. There was immense pressure on Gemini to facilitate a recovery for its users, not just for the sake of its customers, but also for its own reputation and future in the crypto industry. Then, in a significant turning point, in February 2024, Gemini announced a settlement in principle with Genesis and other creditors in the Genesis bankruptcy. This was a monumental step forward, promising a 100% in-kind recovery for Earn users. This meant that if you had lent 1 Bitcoin, you would get 1 Bitcoin back, along with any appreciation in its value since the halt of withdrawals. This was a remarkable outcome, especially when compared to many other crypto bankruptcies where investors often recover only a fraction of their assets. With that said, thanks for watching, and until next time.